Good morning, options traders. Well, this is a little bit of a follow-up from the video that I did last week about how Apple's stock split will affect the Dow. And I've had a number of traders follow up and say, okay, well, it's not going to have any effect on the Dow, at least much to speak of, but how will it affect your actual options? Well, that's a good question because all stock splits, not just Apple's, are going to affect your Greeks to some degree, and especially delta and gamma. And those are the two that I want to talk about here to at least give you some added insights into what you need to be careful of. So as I talked about in that last video, stock splits, remember, have no effect on a company's market capitalization. That's just a fancy way of saying the company's total value. If it had 1 million shares prior to the split and was $100 a share, on a 2-for-1 split, it now has 2 million shares at $50 a share. It's the same price. As I mentioned, it's like getting 2 5s for a 10. So there's no real change in the company's what's called the market capitalization. But the stock splits will definitely affect your delta, and they will definitely affect your gamma. And of these two Greeks, the gamma is the real one to watch out for. So let's start with delta. What's going to happen here? Let's say that you have a stock trading at $120 and you own one 120 call with a delta of 50. So it's a at the money option, and of course the delta is going to be about a half. But then it goes through a 2-for-1 split. After this, you're going to own two $60 calls, and guess what? Your delta stays the same. It's still an at the money option, but you have 2 calls now. So even though the individual deltas haven't changed, your total delta has doubled. If it was a 3-for-1 split, then you'd have 3 $40 calls, and each option would still have a delta of 50, but your total delta is 150. So those delta numbers can really get increased. But, like I said, of these two factors here of delta and gamma, the delta is not really as big of a risk as it might appear, and that's because the stock's volatility gets reduced, roughly proportionately. So yes, you might have more deltas, but now it's, let's say in a 2-for-1 split, it's basically twice as hard to move that stock's price. And that's why when you see stocks like Microsoft with about 8 billion shares outstanding, the volatility is not as great as with something like Chipotle Mexican Grill that has about 28 million shares or so outstanding. So with fewer shares, there's a lot more potential for volatility. So even though the deltas are bigger, that's not the biggest concern. Your bigger concern is the gamma. So remember, gamma shows by how much our deltas are going to change, whether up or down. So let's go back to the $120 call that you had prior to the split, and let's say it has a gamma of 0.05. What that means is that if you have a 50 delta, and the stock rises $1 right now, from 120 to 121, you're going to pick up 5 deltas. That's not going to be a 50 delta option anymore. It's a 55 delta option. That's what gamma's effect is on that option. But now it goes to the 2-for-1 split. What happens? Well, after the split, you have 2 $60 calls, but if you cut the strike price in half, the gamma will double. So you had a gamma of 5, but after the split, you have a gamma of 10. But you've got twice as many calls. And so now your total gamma is 20. It's gone up 4-fold. So the thing that you have to understand is that at least for whole number splits, 2-for-1, 3-for-1, 4-for-1, things like that, the math gets a little bit trickier with 3-for-2s or some of the fractional splits. But I'm just trying to get the idea across to you that things change. So for the whole number splits, your gamma will change by the split factor squared. So in this case, our split factor is 2. 2 squared is 4. And notice that our total gamma of 20 is now 4 times the original gamma of 5. What if it was a 3-for-1 split? Well, the split factor is 3. 3 squared is 9. You have 9 times the old gamma. You now have 45 gamma. You're going to pile on a ton of gamma after a split. And with a 4-for-1 split, you've got 16 times the amount of the original gamma. So the main insight to understand is that changing strikes can affect your deltas and gammas. But stock splits force you to change. You've got no say-so in the matter. So the thing that you want to take from this is that understand the effects before the split, not after. For anyone who'd like to learn more about the arts and science of options trading, please check out the Alpha Trader course and strategy lab at optionsatoz.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.